Looks like we're live here. Hello, everyone, wherever you may be. I'm not going to say, well, I'll say good morning, good evening, good afternoon, because you guys are everywhere around the planet. So, the title for the live stream today is Warren Buffett's 325 billion in cash and T-bills could be in severe danger. And yeah, well, we're going to look at that more in terms of its purchasing power. So that's the main title. Clive is going to be joining us tonight. And yeah, we can focus on Q&A. I think that's a good time to do Q&A during the live stream because I'm getting more and more views and comments, and it's difficult to answer everyone. And so I think if you're new to the channel, and you want to ask questions, this is the best time for it. We'll be here for just over an hour. If you're watching this recorded, yeah, you might want to move 10 minutes forward because right now I'm going to go and say hello to everyone. See, there's a lot of you here already. Silver Task, he's a moderator. Thank you, Silver Task. Darren Smith, Endurorama over here is here. Thomas is here. Andrew Bevan from South Wales. He's a regular. Dutch Libertarian as well as a regular. Martin G. What's up, Mario? New Jersey in the house. All right. Catfish Customs says, hello, my friend, monetary educator from across the pond. I try. Thank you. Ian Carline from New Zealand. Requad, Darren Smith, Mark Sneed, good to see you. Rudy, yeah, Rudy's here. He was actually under the desk earlier. He's a little bit nervous. We have a lot of fireworks going off at this time of the year, and but it's calmed down. It was pretty bad last night. It's going to get worse on the 5th of November, not because of the election, but because it's fireworks night here in the UK. It's a big event. Grant GH says hi Mario, Mrs. Mario and Rudy. Nice to see you here, GH. Yodi is from Denver. Sue Whitaker from Kent. Well, I'm in Kent as well. London, but Kent. GHIS 001 from Montreal or Montreal, as he probably would say it, or she. Andy Brown is here. Brady from Indiana. Jeff from Canada. Frank Peter. Larry Young from Tennessee. GRE 68. Ron Panhart says, my dog went deaf when she hit 15. It has its advantages, yeah. Cypher, Gold 13 Dragon. Don Pelvito from Scotland. Greg Austin. Andy Lee is in Italy, from Italy. Mark CH from Billericay. I know Billericay. Anton Spoe from, or Spogi, I'm not sure how you pronounce it. Bratislava, Slovakia. Mark Sneed, best weekly stream on the tube. Oh, thank you. Trader X, Albufeira in Portugal. Yeah, a lot of people here in the UK are thinking of moving abroad, and I think Portugal has started a program for young British people to move there. They're offering them lower taxes. The only drawback for Portugal with that is that it might alienate the locals that think, if a lot of people from the UK go to Portugal and bid up rents and house prices and stuff like that. Who knows? Hopefully it will work over here. When are you going to start explaining the Chinese economy failure? Well, I don't really follow too much the Chinese economy, and I think the Chinese economy is still growing just below 5%. Yes, they've done more fiscal and monetary stimulus, but it seems to be going quite well. I mean, I watched Bald and Bankrupt on YouTube, and he's just gone to China. It looks like things are going pretty well there. Infrastructure is really good, but maybe we can ask Clive. Clive has um, relatives in China. His wife is Chinese. Maybe we can ask him what he's hearing about China. Brady says Buffett is kind of creepy. Indy, I'm tired of election texts. I'm tired of getting texts from the NHS to get you know what, and I ignore it. I wish I could reply to them, uh, but you can't. Shayhan from Bristol with a scared dog called, is this a success? Success, you decide. Daryl, roughly, yeah, GDP is 4.8 in China, so I'm not sure. There are a lot of people out there, and I'm not a China specialist, but I think there's a guy called Zahan or something. He's always talking about how China is collapsing, but I think China is still ticking ticking ahead, just like the United States is ticking ahead. I think the deficit spending is a lot bigger in the US. And I think the deficit spending we're going to see in China has been reluctant, but they haven't really announced yet how much. They're doing more of a monetary stimulus for now. Low blood pressure. Howard Buffett, yeah, that was Warren's dad. He knew about gold. He wrote an article, 1948, how redeemable money guarantees freedom, gold and redeemable money. He was a sound money guy, Howard Buffett. He was a congressman from Nebraska. Indy, thank you for your super chat. Says, pray for peace. Yeah, Rod Panhard, Peter Zehan. Yeah, someone sent me some videos from him a few months ago saying, how China is collapsing. But I think there's another guy out there. What's his name? He's a fund manager. He's very anti-China. He's from Kyle Bass. He's always talking about how China is going to collapse as well. But I think the UK is kind of going to be, it's a slow collapse. And I've been talking about that, of course. Mo Shab says, really enjoyed your last video. You're welcome. There's a video I did on Friday that is doing really well. I talked about India and the fact that they're repatriating gold from the Bank of England, and it's got almost 120,000 views, which is pretty good for me. Mario, I actually saw Valentine's candy hearts on the shelves at a CVS in New York City. Well, that's early, isn't it? Usually it's after Christmas and New Year's that they come up with the Valentine's. That's early. We're not even at Christmas. It means they're desperate, I think. James Lavender, Buffett in the Red Shoe Club, or they call it, I thought it was the White Shoe Boys. Oh, he's definitely an insider, Warren Buffett. Back in '08, when Goldman Sachs was collapsing, the government convinced him to put 5 billion into Goldman Sachs to keep it yeah, to give it confidence, because if Warren Buffett puts 5 billion in anything, people notice. And but he did it because the government guaranteed him that they would put something through to bail out all the banks. So that, yeah, maybe Warren Buffett knows something we don't about the election, and that's why he's been selling for the last 2 years. And we're going to look at the article in the FT about that. We've got Clive who's just come on. Hello, Clive.
Good evening, Mario. How are you?
I'm well, and you?
Yeah, doing well. You've
Yeah.
got Guy Fawkes Night coming up in a few days, haven't you? And the elections, what is it, tomorrow now? Yes, tomorrow.
No, the election's on Tuesday. It's on Guy
Is
Fawkes.
it the 5th? Same day, 5th. Yes,
Yeah,
it's coming
but
up.
Rudy hasn't been too happy though because they go on with the fireworks before and after now. Today's
Yeah, usually the weekend before, isn't it?
Yeah, today's a little better. But so Clive, the title of the live stream is I'll read it to you. Warren Buffett's 325 actually is 325.2 billion in cash and T-bills could be in severe danger. And I'm not like trying to scaremonger or say that he's going to lose that cash and T-bills. What I'm trying to say is that I think he should think maybe a diversifying a little bit out of cash and T-bills, maybe into that little yellow metal or even the white metal that he likes, silver, because I think purchasing power of the dollar is going to continue to go down. And the other thing it could mean, Clive, I don't know if you agree, he's been selling well, he sold 166 billion dollars has sold over the last 2 years, and I think Apple as well is the latest uh, of his holdings. I think it was the biggest holding he had, but it says here the sprawling industrial and investment conglomerate disclosed on Saturday that it had reduced its position in Apple to 69.9 billion in the third quarter. And I think back in 2023, that position was at 178 billion, as you can see here. And he says that one of the reasons he's getting out of the stock market, first he doesn't see too much upside, I guess, and he thinks that Congress is going to raise taxes, and that could hurt profits because they might come after big corporations' earnings. So he's selling ahead, and some people might say he might know something about the election because uh, if Trump wins, I think there's a much better chance of keeping the current uh, tax cuts. I think they expire next year, but it also depends on Congress. So I'll let you chime in, Clive.
Well, I have a huge amount of respect for Warren Buffett. He's one of the greatest investors of all time. And the way he became extremely rich and the shareholders in Berkshire Hathaway became very rich was by sensible investing. In other words, buying great companies at great prices. So he was particularly good at choosing his moment when to go in, and he'd buy things which, in general, not everything he bought, but in general, he bought things cheaply and they went up. Um, However, he's now 94 years old, and whilst everything I've seen demonstrates to me that he's still got his marbles about him, it is a fact that it becomes more difficult as you get older to make a decision. I've seen that with my own father before he died. He got to a point where he wasn't able to make any decisions. And I've seen it with a few of my clients over the decades that sometimes they get to a certain age and it becomes very difficult to decide to do something. So I'm not saying that he's lost it, certainly not, but certainly as he gets older, and he is far older than most people ever make it to, it's going to become more difficult to make a decision. So perhaps he's got all this cash and he's not able to make a decision to do anything with it. That could be just the simple situation. From my point of view, it's a lot of cash to have, way more than I would be comfortable with, because you're holding effectively, he is holding a depreciating asset. And I think he'd be doing a lot better if he could find something to do with it. And as you said, Mario, a little bit of white metal, a little bit of yellow metal wouldn't do him any harm.
Yeah, and I'm going to bring up a couple of charts here. First one is the gold price. Uh, yeah, in the 10-year note future. I know he's holding short-term treasuries, and I'll come to that in a minute. So as you can see here, oh, it's versus the long bond, sorry, the 30-year bond. Uh, this whole century, it's been the trend is higher for gold versus bonds. I know we've had this uh, correction here. And then you look something more short term, the 2-year note future, which is closer to T-bills. Getting a T-bill T-bill, there's no really T-bill futures. There's like short-term interest rate futures, and they're a little different. But even the 2-year note, I would say gold is showing that the dollar is losing purchasing power versus gold. So I'm not even saying, oh, Warren Buffett should take those 325 billion and buy gold and silver with all of it, because he would probably be stopped on his tracks by the regulators for doing that, especially physical. And there's you probably heard of Martin Armstrong, Clive.
No, I don't know him.
Yeah, he's like a cycles guy, and he's worked a lot with governments and the treasuries. He's a very good forecaster, and he's written about how when Warren Buffett bought silver, I think it was in '03 or some, and silver went from $3 to 7. There was a problem there, and apparently the Bank of England contacted him and asked to get out of his silver position. So what I'm saying is, uh, maybe he should think, or the people that work with him, about precious metals or even the commodity space, because I saw the other day, I think it was King World News, they said that I think there's 311 trillion in investable assets in the world, and only 0.8% are in precious metals and miners. So I'll
I'm just wondering, did Warren Buffett ever buy a gold mining company? I think I
yeah,
remember something about that a few years ago. I don't know if he still got it.
he did. He bought Barrick in 2022. And then a few months later, though, he sold it. So, but I wouldn't be surprised. Maybe, I don't know if Berkshire Hathaway goes into the precious metal space. We'll see. I see that the guy who's going to replace him, I forgot his name. I think it's Aber, his surname. He's 62, and he comes from a energy background, so which is interesting. And with that, Clive, I just want to thank Liam for a super chat. He's from Australia, and he says, "May the people, constitutional money, and common sense prevail." Well, yeah, I hope so. I hope so, and I think there's better chance, even though I try to stay apolitical, but I think there's better chance of going back to sound money with Trump than with Kamala Harris. And why do I say that? Well, I was listening to um, Steve Bannon, who's just been released from jail, and he said that the Trump movement, ultimately what they need to look into is the money system and the people who benefit from it. So there you go. What do you think, Clive?
Uh, I just carry on with the story that anyone who's holding cash in the bank or bonds, you're on a hiding to nothing. You're going backwards. We're not going to get sound money, Mario, not anytime soon. And the only way you get sound money is when it's not being inflated and when the government isn't borrowing, or at least it's keeping its borrowing constant. I mean, I guess it's okay if the borrowing is increasing at the same rate as the economy, but we're in a world where the borrowings of government are increasing faster than the growth of the economy, faster than GDP. But if they had sound money, we wouldn't have any inflation anyway. So they wouldn't need to increase the borrowing.
Yeah, yeah, I know. And I met Ron Paul in 2002 at the Mises Institute. I was there for the 20th anniversary conference, and we were talking about Alan Greenspan's essay from 1967 called Gold and Economic Freedom. And Ron Paul said that Greenspan autographed that essay for him. And Ron Paul asked him, "Do you still believe in sound money and everything?" He said, "I do." And he was chairman of the Federal Reserve at the time. He said, "But, until the general public wants sound money and they don't want, the government to spend, borrow and spend and give them free goodies, we're not going to have sound money." So I agree with you. And I guess the best we can do, Clive, is be our own central banks and acquire our own sound money reserves. Isn't that what
Yeah,
you?
yeah. Talking of that, I was at the coin fair in Zurich. It's once a year last week. That's why I wasn't on your show. And I bought this beautiful Australian coin. It's what they call slabbed. It's from the Numismatic Grading Corporation, and it's the Australian RAM from the year 2003. And of all the Australian lunar coins, they've got three series. This is the first series, the second series is out, and then the third series has just started. Of all the lunar coins, this is the rarest of them all. There was only 16,000 and something of them produced globally.
Nice.
So I was very, very lucky to buy that. I paid a premium over the gold price, but not much. And we only need the gold price to go up about $100. I'm going to be in the money.
Someone's asking here about usury. Well, I think usury has been seen as charging too high an interest, and the problem with usury is that, uh, yeah, it's kind of like if you keep it going too much, you end up with people losing everything. And there has been, I think, in the States there was a limit on interest rates up until 1980 or something. And even in the UK until I think the 1830s or 40s, there was a limit of 3%. And then they lifted that to 5. But central banking, I'm not sure how it's related to Zionism and communism, but you know, historically, yeah, every kind of ethnic group and religious group has lent money. Maybe not so much Christians and Catholics because they were forbidden. And maybe that's why the Jews got into the business because someone had to lend the money and they didn't mind lending money to non-Jews. But nowadays, is in every country we have central banks, and yeah, I'm not really sure how the religion is related to it. Any thoughts, Clive?
Well, I recollect a few years ago, it was probably more than a decade ago, I was contacted, or my father was contacted by a relative of my family, a young relative, nothing in my direct line, to ask if she could borrow £100. And my dad was very distressed by this request, and he got in touch with me. So I spoke to the young lady, and it turned out that she'd got two types of loans. One was a car loan. She couldn't drive, but she'd guaranteed it for her boyfriend effectively. And when I looked at the leasing rate, it worked out at 49.9%. So that's usury. But the worst part of it was something where she'd got herself into payday loans. And the unfortunate thing about payday loans is they expect you to pay it back on the day you get paid. And they take it literally, they take it out of your bank account on payday. So
Yeah.
it's not like you voluntarily go and hand it over to them. They literally take it from you. And I worked out the interest rate on that, and it was over 1,000% annualized. Now they didn't exactly call it interest; they called it a fee for the convenience of getting your money. But the trouble was, this dear lady, she had no choice. She had to feed her children, and it was literally rolling over every month, every week, effectively. But that's usury. But they in the UK they can get away with these sorts of outrageous rates.
Yeah, we do have payday loans and stuff. I think pawnbroking is probably better because even though you pay fairly high interest for 6 months, if you can't pay anymore, you just lose your collateral. So you know what you're getting into. But yeah, I think, yeah, the problem with central banking that I have is that the government gives power through legislation to a group of people, an institution, to basically have a monopoly on creating money out of thin air, actually. And people, the excuse of some people of why we need it, Clive, is that there has to be a lender of last resort. But I think that's a sophism as well. It's like, why it creates moral hazard because if banks know that there's going to be someone to bail them out, they're always going to be irresponsible. So I think one of the solutions uh, to usury is not to have a central bank. But even without a central bank, there will be usury. But people just have to. Uh, I think sometimes people need to live within their means. Because there's always going to be the temptation, and people are always going to exploit that by lending people at high interest.
And while you're talking about banks, Mary, perhaps I just should tell your listeners the difference between two types of banks. You've got the commercial banks, which are the large retail banks, and then you've got the private banks. Commercial banks, they're in the business of taking your money and lending it to others. So you have a certain risk if the people they lent it to don't repay it. On the other hand, private banks, and it's not universal, but in general, private banks don't lend the money that people have deposited. What they will do is, if you so authorize, they'll lend it on your behalf in what's known as a fiduciary deposit to another bank. Uh, but then it's down to the client whether he authorizes that specifically, or more likely they just keep it in their treasury. But what they don't do is lend it to businesses or lend it to people who can't pay. What they can do in private banks is what's called we call it in Switzerland a Lombard loan. In the UK, you might call it a secured loan, but that's a loan which is secured by your assets. If you have 100 in the bank and you need a short-term loan for something, they'll lend you 50, but they've got the money. It's completely different from a commercial bank who's lending money to people who couldn't repay or might not be able to repay. So if you're wanting to keep your money safe, it's much better if you park it in a private bank than if you park it into a commercial bank, which is one of the big clearing banks, which have got lots of customers and give out mortgages and loans for car loans and all that sort of stuff.
Yeah. Someone asked me if I what I think of Greg Manarino and Gerald Celente. Well, I've watched them for years, and I think yeah, they're good, and I agree with most of what they say. And I saw Gerald Celente the other day with Judge Napolitano, and Judge Napolitano said that it doesn't really matter who wins because there's some very powerful forces behind the president. And I think he's right. I mean, I would love to see, uh, all the promises that we're seeing by Trump and people like Musk and RFK come true, because I think that would improve things. But I'm not holding my breath. Just Clive, I vote for me every morning when I get up. That's what I try to do.
quite right. I listen to, is it called Gregory Mannarino sometimes?
Yeah,
He gets very excited, doesn't he?
yeah,
I probably wouldn't park any money there, but it's very interesting to listen to, and I think he's usually got a point, and it's a good point.
yeah, he's anti-central banking, which I like. And he tries to tell people you got to take advantage of it. And that's what you have to do. But there's an old saying by the Chinese philosopher Sun Tzu. He said that the only way that you'll be able to maybe win a war, well, win a battle and then eventually win a war, is that first you need to know yourself, because if you don't know yourself, you can't do anything. But then you have to know your enemy even better. And I think a lot of people don't know that the monetary system and the banking system, and by banking I don't mean all banks, but the commercial banks are there to really not to benefit people. Um, yeah, so there you go. Someone also asked about Warren Buffett and silver, the relationship. Well, he's been known to like silver, and like I said, I think it was back in 02, 03, or maybe even before. It was in the late 90s. He bought a lot of silver, and he drove the price of silver really high, and then he got out really quickly. And if he had stayed long silver and it was physical, he would have made even more money. But my feeling is that, well, that's what Martin Armstrong said, that the Bank of England gave him a call. And I think the Bank of England works with the LBMA and said, sorry, Mr. Buffett, will you please sell your silver? And yeah, and that's what happened.
And it makes you wonder why would they interfere with the free market?
I think it's because uh, even though people don't think silver is that important anymore monetarily. I think, Clive, if silver started going through the roof, the general public would wake up and say, wow. And if you look at the name of money in many languages, even in the UK, sterling,
Yeah,
all to do with silver. And look back at the Hunt brothers. Uh, they drove silver up to $50. And actually, they started buying physical in the early 70s. But for some reason, the Fed, the regulators, Paul Volcker, they couldn't have silver going up. They had to stop it. So I think it's
yeah.
still really important.
Well, I remember that there's Nelson Bunker Hunt and William, I think his brother's name was in the 1980s. They they basically changed the rules on them mid-game. Uh, the Hunts were trying to take delivery of the silver future contracts, so they changed the rules so they couldn't take delivery either of none of it or of only a small proportion of it. They refused to let them roll over the contracts. They were only allowed to roll over a very small amount. And effectively, although they'd bought all this silver, they could neither take delivery nor roll their contract into the next future, which meant that they were forced to sell. They were told, you can sell, but you can't buy.
Yeah.
And that effectively brought the price down from around 50 odd bucks to, well, suddenly much lower than it is today.
Yeah. And I think in the last few weeks, the COMEX is also being raising the margins for gold and silver. But I don't think they're going to succeed because this time, Clive, the people who are buying the physical are not domiciled in the United States. They're sovereign countries. I
Yeah.
mean, we saw like a month ago the Russian finance ministry say that they're going to start buying silver, platinum, and palladium. Did you see that?
Yep. So Russia said they for 3 years in a row, at least, they said 2025, 2026, and 2027, they will be adding to their reserves in these three precious metals in addition to gold. So right now it's gold, but next year it'll be gold plus silver, platinum, and palladium. And of course, we must remember that Russia is one of the major suppliers of platinum to the market. So we'll see what that does to the platinum price.
Yeah. Helsinki. Hi to both of you. Just wanted to ask if you have any opinion on crypto 2025 onwards, XRP in particular. Thank you. My answer is really short. I have no opinion. I think Clive might have some opinion on it.
Look, I divide crypto into two camps. One is the Bitcoin camp, and that might just include Ethereum, and then there's everything else. So on everything else, absolutely no opinion at all. Um, I think we're still looking for the utility of crypto in general, but gold has been up and down and up again and down again. And when something is going to fail, it's very rare that it comes back up again after it's gone down so much. And I think last week we were almost at the all-time high for Bitcoin. So, in my opinion, Bitcoin's not going to go away. As for the rest of it, I wouldn't really be rushing to invest it. On XRP, I know everybody keeps talking about XRP. I'm going to admit that I haven't been able to see why it's valuable. I have had a look. I think I'd far rather own shares in Ripple Inc. I don't own any shares in Ripple Inc. directly, but there are some publicly quoted companies which do own Ripple Inc. And if those who are interested in that might want to go that way rather than buying the cryptocurrency.
Yeah, Dutch Libertarian is asking about the Basel rules. Gold is not really a tier one asset. What gold is an asset that can be used to work out tier one equity capital for banks. So it can be used just like cash. So it's not really a tier one asset. It's an asset that can be used in the calculation to uh, to work out tier one bank equity. So we have to differentiate that. I know it sounds very similar. I didn't know. Well, tier three basically means that's the bank because when you think of Basel, you're thinking of banks and how banks are regulated. So I would say tier three would be a calculation that isn't as robust for the banks, so they can use it when they're looking at their tier three equity. They can use silver in that. But I would argue that silver should probably actually be able to be used to calculate tier one equity. What do you think, Clive? I don't know if you uh
So yeah, they put the gold into as a tier one asset for banks, which means it's of the highest possible quality for all the assets a bank can hold on its balance sheet. We have the old expression "as good as gold." Well, I suppose what they're saying is gold is as good as cash. It's sort of kind of back to front because gold's actually better than cash,
yeah.
and that's where they placed it. They placed it at the highest level, at the most important level from a bank's perspective. So, if as a bank you're holding gold as opposed to holding T-bills, you're in a better position with the regulator.
Yeah. And I wanted to show a chart of gold, Clive, that because I think people get in the short term, they get concerned about corrections and stuff. And this is a chart that I think is a bit of an eye opener. And it's a logarithmic chart quarterly, I think. Yeah, quarterly, going back to
Mm-hmm.
the early 70s when gold was still fixed at 35. And I've drawn these little bubbles here. So from 1971 to 1980, that was 9 years. We had like this correction here from uh, basically end of 74 until uh, end of 76 almost. So 2 years, and then started going up. And we went from 100 to basically 850. So 8.5 times. And then this bigger bubble here is to do with the move from 1999. And some people say the bottom in gold was in 2001, but if you go here, the low was 252, and here it was 254 and 255. So really the low was 1999, and it took 12 years to go to the new high there, 1921, I think it was 1920. So it took yeah, so here is 71 to basically 75, 4 years. So here it took 12 years. And then the consolidation that we had here, we had it here too, but it took what, from 2011 to here when it broke out earlier this year, actually. But if you look at the low in 2015, um, let's say it takes another 12 years. So get 12 years here and 12 years here. So if you add, um, let's say beginning of 2016, if you add 12 years, that's 2028. We're not that far away, Clive. And if you do 1,045, I think was the low here, times eight, which is, this move here, you get over 8,000. Uh, and I think some people have looked at that and yeah, like I think Michael Oliver, he sees that as well. So if you do 1,050 times eight, that's 8,400. And this is looking at it like this shows you that, yeah, we're still early days. What do you think, Clive? I know you're
So
so much into technical analysis, but this one seems to be working quite well, I would say.
yeah, gold seems over the years I've been looking at it to do the opposite most of the time to the stock market. So if you take the period from 1980 to 2000, or let's say 1990 to 2000, gold was going down and the stock market was going up. It hit an all-time record in March 20, well, not all-time, it was all-time at the time, in March 2000, the end of the dot-com bubble. So stock market had been going up like a rocket, gold had been going down. Then from about 2000 onwards, gold took off, and for the next decade, the stock market went down. It was down about 10 or 15% over the decade, whereas gold was up about 300 or 400% over that decade. And then we had a decline in gold starting from the year 2012 or something like that. And the stock market has been in a massive bull run. And then the last let's say 2 years, we've had both gold and the stock market in a bull run. But I think we've got the start of the gold market going up, and I think that'll last another decade. The question is it signaling to us that it's time for stocks to go back down? If you're looking for a pattern, it is. I'm not a believer in patterns like that, so I'm going to tell you that I think that both are going to go up.
Yeah, maybe Warren Buffett sees it going down because he's getting rid of a lot of his stock. I think he's got more cash than stocks now, which is quite amazing, I would say.
In a way, maybe he's right because Warren Buffett is forced to own the very large caps due to the size of his fund. He can't
Yeah.
buy the middle stocks or the smaller caps.
He
But
couldn't
there's a
buy a
huge
junior minor, could he?
there's a huge valuation gap between the top 10 companies in America and the rest of the world. So those top 10 companies represent, I can't say the figure, but maybe 30, 40, 50% of the entire world's market capitalization. And they're very overvalued. And the reason they're very overvalued is because people keep buying ETFs, the best performing ETFs, and the best performing ETFs are then forced to buy these large cap companies. So these large cap companies at the moment seem to me to be very overvalued. And if they were to take a breather, what does a breather mean? Maybe going back 30, 40%. It's going to drag the index with it. But I don't think that the smaller mid caps will go down nearly as much because they're at much lower multiples.
Yeah.
But of course, if the big caps go down, everything goes down. And if we have a 30 or 40% decline in the stock market, it'd be very hard even for gold or silver to go up. But I think the gold and silver will do relatively well. So if you've got to be in something, it'll probably be the best asset.
Yeah, and I think I was talking to a friend of mine. It could be more or less, but the Magnificent Seven, their market cap is like 13 trillion if you add them all up, which is more than the GDP of like Germany and Japan put together. It almost feels a little bit like in the 80s when the land of the Imperial Palace in Tokyo was worth more than the whole real estate of California. So who knows? Um, Chris Conman has, thank you for the super chat. He says, what are some of the tools that the COMEX and LBMA use to suppress the price of precious metals? Is there a price point for gold and silver to be at where they don't have any more effect on them? Thanks. Well, I'll answer that first. Uh, well, the LBMA, I've spoken with David Jensen, and you can look it up. He explains exactly what the LBMA does. Basically, the LBMA is the London Bullion Market Association. It's supposed to regulate the bullion banks, but according to David Jensen, he's researched this in 1986 when he had the Big Bang, which was when they opened up the financial sector in the city of London, and they regulated it. They created the LBMA, I think, and but the bullion banks actually they self-regulate, and the way they control the price is that they basically don't have to have gold or silver. They can just say use what they call unallocated, which means they can just, they have a 400-ounce bar of gold and they'll just say, "Oh, that's going to be actually 400,000 ounces." They can just lease it many times over. There's no limit, and the same thing for silver. So they're able to create artificial supply. That's how they control the price. COMEX is not so much because it's more of a futures market, not a physical market, but it's the same thing on COMEX. And I worked in the futures market, and I did trade some gold and silver futures for clients, even though that wasn't the bulk of my business. But I can tell you that I've never seen anyone take delivery of anything in the futures market. Maybe sometimes in the 10-year note futures, maybe once in a blue moon. And I remember, Clive, one of my colleagues had a big Norwegian client, high net worth guy, and he really did really well in the silver market in 2005, 2006, and 7. And I said to him, because I used to speak to him, and I said, one thing that you should do is think about taking delivery, the physical. And I asked the head of my desk, so and so is thinking about taking physical delivery of silver. And he said to me, don't even think about it. So
Yeah,
that's how
no,
it works.
nobody. Honestly said, I've worked in banking 47 years. I've never seen anyone take delivery of the silver bought as a future.
Yeah.
So I don't think it's just one of those things which doesn't happen. I bought silver futures myself, not I was gold futures, not silver futures. I bought gold futures many, many, many years ago. When this would be when it went up from $200 to $850 an ounce. But I had no intention of taking delivery, and of course, I didn't actually have enough money to do so.
Yeah.
But when I took the profit, I then put the profit into gold.
Yeah, that's a good idea. And what else I was gonna say? Well, I think Chris asked at what price does it all fail? I think, as I said, it looked like it was gonna fail back in 1980 with the Hunt brothers, but the Fed and the regulators stopped them. But I think what is gonna fail the COMEX and LBMA now are the sovereign countries like China, Russia, and even European countries like Poland and India as well. Their demand for real physical gold and silver, that's what's going to make it even harder for them. What they're trying to do, I think, now is probably cover their paper shorts, gradually. They don't want to panic because if they panic, when you cover your short, you have to buy the future. It's going to make it even worse. So I think they're making a very careful retreat. That's how I see it. Any views on that, Clive?
I think that's the plan. I think they want to cover their shorts very slowly and gently without a panic, because they have to do it in a rush. It would explode the price. So yeah, I think my personal view is the price of gold and silver, both of them, is somewhat underpinned by people starting to unwind their shorts. Now, it's not really people. I think it's the large bullion banks who are
Yeah.
effectively short, and they're doing it. So they've got the money. They don't have to do it in a rush. But the higher the price goes, the more they have to apply risk management and reduce their exposure a bit.
Yeah, and I think the other countries that are buying, they don't care. They've got time. Sovereign
Mm.
countries, they've got their yeah, they think in especially Russia and China, they think very long term. They don't think they're not as short term as the way our countries are run because elections don't matter as much for them. Here, every 2 years in the US, there's an election. In the UK, every 5 years, and then sometimes there's local elections. And I'm not saying I'm not making any judgments about politics. I'm just saying what it is, right?
On another topic, Mario, have you seen what's happening to the 10-year US Treasury interest rate?
Oh yeah, it's really spiking it. And I looked at what you wrote the other day on LinkedIn, and I've got it up here for you. Maybe you can tell the viewers about it.
So what you're looking at are two graphs, one on the left, one on the right. The left one is the interest rate on the 10-year Treasury. The bars you see are monthly bars, so it's showing the change in a month. So what we see is for the last 5 months, 5 months, the interest rate on 10-year treasuries has been rising. It was down at 3.6%. Now it's at 4.4%. So interest rates on the 10-year treasury have gone up by 0.8% over the last 5 months. And that's at a time when the short-term interest rate is supposed to be coming down. It has come down by a half a percent, and it's going to come down again, I expect, in a few days.
Clive, can I just
Um,
sorry interrupt you? I
mhm.
think it's weekly because it bottomed when the Fed
Oh, yes. Sorry, that's weekly. Yes. Beg them.
September 18th. So what do
That's
you
a
think
weekly. It's
it's telling us?
5 weeks.
Usually, if the Fed cut rates by 50 and they're worried about the economy, uh, in the past, the 10-year yield would probably dropped.
No, normally that's what happens. When the short-term rates come down, the whole curve comes down. But this time we've got the curve steepening and we've got the long rate. And as you say, it is a weekly chart. So it's the last 5, 6 weeks in a row, the interest rate has been rising. In fact, it's been rising since the Fed cut rates a month and a half ago. But on the right-hand side, there's another chart. And that chart is the chart of the option volatility, the implied volatility of options on US Treasuries. So what it means is that option traders are paying more and more for their options on US Treasuries. These could be put or call options, but what it's saying is that option traders don't think that the price of treasuries or the yield on treasuries is right at the moment, and therefore they're buying options. Now, when what do they think? I think they are thinking that the yield is going higher, and that's why the option price is rising because people are effectively betting that the price of the bonds are going to go down, and when we've seen spikes in the option volatility on the US Treasuries in the past that has signaled effectively a rise in the bond yield. So I think what we're looking at here on the right-hand chart is, as we're looking at a large rise in the volatility or option premiums, if you like, we're looking at the probability of interest rates continuing to rise at the long end at the 10-year mark.
And Clive, I'm going to switch over to this US debt clock because it's approaching 36 trillion here. And maybe it's one of the reasons why it's these yields are continuing to go higher despite the fact that they're cutting rates. And I was really surprised that the 10-year yield didn't drop on Friday because we had very weak jobs data, which you spoke about here. Maybe you
Yeah.
want to cover that.
So I'll comment that. So on Friday, the we had the non-farm payrolls report, which announced that there were 12,000 new jobs created in the month of October, I suppose. Is it? Well, yes, October it's showing there, which is the lowest level of jobs creation since the 2001, 2020 COVID pandemic. So it wasn't a very good number on its own, but when you burrow down, you see that they've only got a positive number because they adjusted the previous month's number down and the 1 month before that to a lower starting point. So they've reduced the previous month's numbers by 112,000 persons, meaning that the starting point is lower, and that's where they got a positive number of 12,000 from. So if they hadn't adjusted it, we'd have had a negative number of over 100,000 employees. But the truth of what's really going on in the employment market is when you look at the what's called the household data, and I put that up there, which
And
shows you the number of.
Sorry, the isn't that the number of jobs, not employees, that was 12,000?
Uh, so yeah, yes, it's the number of 12,000 jobs, not
Yeah,
employees. You're
and the
correct.
other thing they added, Clive, it would have made it even worse. I think it was 40,000 government jobs, which we know are not very productive.
So
So
exactly. So at the bottom of that chart, which I put up, you can see that in the month there were 40,000 government jobs. That's coming on the back of quite a few jobs, something 30,000 created the month before that. So they had 12,000 new jobs, and there were 40,000 new government employees in the month. And the previous month number was adjusted downwards to make that positive number of 12,000. But the real truth is, if you look at the household survey, which doesn't tell you about the number of jobs, it tells you about the number of people with jobs.
yeah.
So, so if I've got 3 jobs, that counts as 3 jobs in the non-farm payrolls report. But from the household survey, it's only one person. So the household survey is telling us that 368,000 people less have jobs in the month than they did the before. So looking at these numbers, they're particularly bad numbers from a jobs point of view, and it does tell me that maybe the USA is heading into some sort of recession. But the odd thing is, we've got the rising interest rate on the 10-year, which shouldn't be happening if we're going into recession, and we've got a rising gold price. So what's that telling me? It's telling me that investors are seeing that probably we've seen the low point, or as near as makes no difference, in inflation, and that inflation rate is going to start heading back upwards next year. That's what I think the combination of a rising long-term interest rate and a rising gold price is telling me.
It looks like there's
And
going to
we're going to a recession in the meantime. It's going to be what they call uh, an inflationary recession, a stagflation, as it's known.
yeah, stagflation. Yeah. Um, there's a secret window tonight at 6 p.m. Eastern time coming up from here.
I
Anyway,
wonder what that is. So we must all look at that later.
yeah. So let's see if we got any more questions. Oh, we got a super chat. Stephen Young, thank you for your super chat. He says, I'm a working class man who has climbed up, I think, that greasy pole in life. I love gold, keeping my wealth out of the bank. However, my view is silver is going to smash it in the next 6 months. Your views? I'll let you start, Clive.
I think he's right. Um, we have a supply and demand imbalance in silver, which has existed for a couple of years now. The mine supply has been falling for a decade. We can see that information on the Silver Institute website, and the industrial production usage of silver, and if we also including silver jewelry and cutlery, has been rising. So the reason it's rising is mainly due to electronics use, where the consumption of silver in electronics is rising by about 20% a year. So in 2022, we had a shortage of silver. 23, we had a bigger shortage. And 2024, it's forecast that the shortage will be bigger yet. And those numbers are going to carry on in that direction because we're not going to be using any less silver in electronics. We're going to have more electronics devices next year. And in terms of getting more silver out of the mines, the forecast, at least for this year, is there'll be less mined production than previous years. And the reason for that is, whilst there are pure silver mines, an awful lot of the silver which comes out of the ground is a byproduct of mining other metals, specifically copper. So the silver price is a bit of a bonus when they're mining copper, but they're not going to increase the copper production to get more silver out of the ground. So I think that silver production could either continues to decline or doesn't go up. The demand, I think, is almost a dead cert that it's going to go up because unless they find a substitute, a better substitute for silver to use in electronics, that consumption, which has been rising 20% a year, is going to carry on. So how can they get the difference between the supply of silver from the mines and the amount of silver which is required? Mario, you put your hand in the air.
Higher prices.
Higher prices will cause the grannies to take their candlesticks down to the pawn shop.
I don't even
Uh,
grannies still have a lot of silver.
um, not in the consumption of silver, we're not counting, and I haven't been counting the investment consumption of silver. So if
Yeah,
I buy some silver coins or something like, or a silver bar, that's not counted in the consumption. It is consumption, but it's not counted in the industrial use.
yeah,
Uh, so that could go both ways, of course. People can take their silver back and their bars back and it can be melted down,
yeah.
or they might get gold or silver fever and want to buy even more. And I get the impression that probably some people are starting to say, I'm going to start buying. I've met quite a few people in the last, let's say, last 6 months who's bought their first or second silver coin. In fact, I met two of them, and they're actually fans of your show at the coin
Hmm.
show in Zurich, and they were both. I met three people. Two of them were your fans. One had been a gold investor for many years, and the one had never bought a coin yet, but she'd come specifically to buy her first silver coins.
Hmm.
And then I met another one who was a friend of ours, and she came along and she started buying silver coins for her children to teach them the difference between sound money and non-sound money. And one of the funny things which she managed to buy, which I thought was really nice, was a presentation case which had a $1 bill and a silver $1 coin.
Yeah.
And it was priced very roughly at the price of silver plus a dollar. But it came effectively with a nice presentation case to show the fact that one's a bit of paper and one's made of hard of solid of something valuable.
Yeah, my view on silver, answering that question now, 6 month in the next 6 months is tough to say. Uh, and if you look back to the 70s and even 2005, six, silver is usually takes a little longer to catch up with gold in the precious metals bull market. So it's like let's say a horse race. Gold is like leading, and silver comes from behind and actually usually overtakes gold at the end and outperforms. So yeah, I'm positive on it too, Stephen.
One of
But
your viewers has written about World War III and would
okay.
dollars be a safe haven? And what about precious metals?
Uh,
What do you
yeah.
think?
Well, the dollar, I guess the dollar he means the fiat dollar, paper
Yeah.
money. Well, no, paper money during wars are no good. So the only money that other countries will accept in the war is gold. Uh, paper does paper doesn't work. I think even Alan Greenspan said that, in times of war, people only accept physical. That's how I see it.
Yeah. It's
I
kind of a knee-jerk reaction to rush to the dollar or for the rush to money in times of war because people feel uncertain, they're worried, and they think, I want to have some cash near me, I'd have it, keep it near. But at the end of the day, when you go to war, you have to spend an awful lot of money paying for the army and the bombs and everything else. So you're effectively going into something, if you do go to cash, which is going to be massively inflated,
Hmm.
and it's already been massively inflated. We haven't got a war, at least not
I
in
know.
America.
Yeah. I think if we go to war, yeah, you can kiss goodbye to paper, to the fiat currencies. Maybe not during the war, but after the war, they'll all that's usually when it shows up, all the inflation. And this time around, like you said, Clive, we haven't had a war, and we have so much debt and currency as if we had had a war. And even the taxation, Clive, here in the UK now, we're getting taxed more than they did during World War II, which is crazy. Someone asked here about thoughts on Ron Paul advising Elon Musk on cutting the size of government. Yeah, I saw that tweet or post, and Elon Musk goes on about the Department of Government Efficiency, which is a play on words because Doge, like the coin that Doge.
Very good.
I I think that's a mistake to have a Department of Government Efficiency because Clive, why do you think it's a mistake, Clive?
Because you're employing more people for that purpose. I
That's
mean,
right.
why are they? My question is, why have they employed 40,000 people in the last month? What are they? What are they there for? Is it to count
Yeah,
the votes?
I know,
I mean,
but I think Ron Paul would be a good guy. But I don't know if they would listen to him. He would. And someone mentioned earlier, I saw scroll through the chat that Ron Paul wanted to cut Social Security. But no, I think what Ron Paul always said, and I spoke to him 20 years ago, and he spoke at the Mises Institute. He he's not for cutting everything all at once, and basically shortchanging people who've been paying into the system because he realizes that's wrong. What he proposes is that you gradually wean off younger people off the welfare state and Social Security and all that stuff. But I don't think he wants to like take away Social Security and Medicare and Medicaid from the elderly. What he wants to do is to phase it out gradually. So anyway, Clifton Moberg has a super chat. Thank you. Is port portraiture on currency honoring, or is it just propaganda? What do you think, Clive? I think it's just to propaganda to make it look official and valuable.
yeah. Well, ever since the beginning of time, they put the head of the king on the banknotes,
On the
or the emperor
on
or
the
the leader,
coins.
yeah, and the coins.
Well, they didn't have banknotes
Yeah, no, they didn't. That's
from
right.
the time.
Um, I think it's very much tradition. That's what I think it is. You don't have to have a king or a queen or an emperor or a prime minister on your coins, but tradition says you should. So I think that's all there is to it. It doesn't give it any value. Nobody says it's
Yeah,
more valuable because it's got the king's head.
I think the florin, which was the coin of like the from like in the Middle Ages, it was the coin of Florence, and it was really used worldwide. It was like the standard. It had the flower that represented Florence stamped on one side, and on the other side they had Saint John the Baptist. He
Hmm.
was the patron saint of Florence. But
And
that coin was used all over the Europe for a few hundred years. And why was that, Clyde? Well, because it was always about 3.5 grams of gold, and it was reliable. It never changed the weight, and that's how you create confidence.
I have silver coins with no head on either side, but the weight is clearly stated. So a 1 ounce coin with or without a king's head is worth the same as a 1 ounce coin
Yeah,
with it.
yeah, yeah. There's a question here from GH. When the reset happens, where do you sell the dollar value of gold? Uh, Question two, when do you anticipate the reset and what would be the indicators? Um, I'll let you answer that first,
Okay.
Clive.
Well, first of all, the reset can take place in many different ways. Ranging from a high inflation rate to a replacement currency to requiring everybody to have a coupon before you spend your money. So effectively, the coupon's the money, to some sort of bottleneck on how you're allowed to use it, and then there's exchange controls. So it doesn't really matter in what way or shape or form the reset happens. The losers are those who hold cash and bonds. The winners are those who hold precious metals or other tangible assets. So the question is, after the reset, how do you turn them back into cash? Well, let's say that after the reset, the only currency you could use happens to be the central bank digital currency. What you would have to do, and you wouldn't have much choice about this, is you'd have to go to the coin dealer and he would credit your wallet with the CBDC in exchange for your gold or silver. But if we've got to some other system like ration coupons, that's the only way to spend your money. I'm not sure you'll be able to change your gold and silver ration coupons very easily.
Yeah, yeah, that's right. So I agree with Clive there. I won't add anything. Someone's saying the British are coming. That's supposedly what they said at the when Paul Revere. Apparently, that's what Paul Revere said uh, at the when the Revolutionary War started. But some people say that they wouldn't have said the British because the the people in the colonies considered themselves British. So I think they said the redcoats are coming, Clive.
Ah, okay. Yeah. Redcoats being the British
Yeah,
or
because
the English, the
the
English.
people in America were mostly British as well. So anyway,
Hmm.
um, I think we're out of time, Clive. So do you want to tell the viewers how they can get in touch with you and ask some questions, maybe?
So if anyone has any questions on financial matters, I'm quite happy to answer you via LinkedIn. I don't really do email or WhatsApp or anything like that. So just get in touch with me via LinkedIn. It's completely safe. It's private chat, and I'll be happy to answer your questions.
Great. And yeah, from me, I want to wish you all a great rest of the weekend or a great week if you're in Australia or Japan. And yeah, let's see what happens on, well, Tuesday
Choose
in the
Tuesday.
US. But one thing, Clive, is that we might not find out until a lot later, and that's going to create uncertainty. So let's hope
Oh yeah, it
there
could
will
be
be,
contested, couldn't it?
yeah, let's hope there's a clear winner uh, on Wednesday morning. So with that, I'm going to wish everyone a great rest of the weekend again, and I'll talk to you later. Take care. And thank you, Clive.
Cheers. Bye bye, everybody.
Bye. Uh, all right. Yeah, I think that might be the case. Disputes.